Welcome back to the final segment of Investing with Confidence. As always, I am your host, Joshua David, and we still do talk about the do's and the don'ts of the financial markets. When we talk about the financial markets, that's the stock market, options, futures, forex, cryptocurrency, all taught by our sponsor, Online Trading Academy, on their 25th year, teaching people just like you how to trade and invest with these beautiful financial markets. If you happen to miss 2 tickets for this investing class right here in Bloomington, just call right now. Call 952-814-4410 or just text the word INVEST to the number 484848. Pick a date with the link that we text you back, and you'll receive a financial quick start kit that'll help you get started right away. Al, in that last segment, I kind of gave a little teaser about it's a horrendous thing that could happen to a lot of people, and it's actually a 50% drop in the market. What that could look like. Now, it's happened a few times already in 2000, in 2008, and now I just want to kind of illustrate, especially for our YouTube listeners, on a chart, what that would look like. A 50% drop right now from where current prices are at roughly brings it to where it was in 2020 from the Corona drop, and that's it. That's a huge, huge drop in the market. Now, if you're listening right now, think about this. What would a 50% drop do to your portfolio? Well, you have 2 choices here. 1, let it disappear, or 2, take advantage of this great opportunity. I always talk about this in this workshop. This is the opportunity that we will probably never see again in our lifetimes. So, Al, let's talk a little bit more about that. First off, how do our listeners have an opportunity and talk about the concepts and techniques to protect what you have if the market does drop?
Well, there's a couple of things. If we have a market drop, number one, you want to make sure you're protected. That's one way of going through that. But here's a better way. What if instead of your portfolio going down 50%, what if it went up 50%? What if you had the opportunity or the potential to do that? Well, there are assets that you can use, and if you're self-directing, you have in your self-directed IRA or just an individual investment portfolio, you have the opportunity to have assets in there that will benefit if the market's going down. So if the market does retreat 50%, you have the opportunity to be actually profiting during that time period. Because if you let the market take 50% away from you, your portfolio has to be up 100% to get back to where it was. And the problem there is that when people go through a loss like that, they take on more risk than they know how to handle, and that's something you don't want to go through.
So, Al, you can't technically short in a qualified retirement plan.
Not shorting in its traditional form, but
Correct.
You can.
So how do you do that?
Okay, you can do it with options. There's an option strategy that will go up in value as the underlying, either the market in general or an individual stock goes down. That's called a put. There are exchange-traded funds that go the opposite direction of something. So if the S&P 500 is going down, that called an inverse ETF, that will go up in value. So you have those 2 in addition to just selling an ETF. What about selling a futures contract? You can use those leveraged assets.
So like the S&P 500.
Exactly.
If someone has 401k or IRA, maybe they don't want to, say they just don't understand or know this yet on how to protect what you have, but use a different market to have the opportunity, and it's kind of it's hedging is what it is.
Right.
So it offsets those losses is what that does.
Yeah, and the reason that most people don't know about these is that you have been conditioned to believe that this buy and hold strategy is the best way for you to go. If you're following that buy and hold strategy, it means you have to go through that 50% drawdown and just suck it up. Say, this is part of, well, really, that is part of what they'll tell you. Don't worry about the drawdowns. It does not make any sense.
You know what, Al, let's address something in the room here, too. What are those nice puppy dog and rainbow things that your broker and advisor will tell you in a down market?
Don't worry about it. Hold on. Or, you know what? Maybe this is a better time to buy because you can get things on sale. Well, what they're not telling you is that if you hold on for a little longer, it's going to be it's going to be a bigger sale.
But why do they do everything they can to keep you in the market?
Well, because that's how they collect their fees. That's how they make their money. Whether the market's going up, down, or sideways, you're actually paying somebody for the ability to have your portfolio go down in value.
Well, hold on a second. So if the market's going down, somebody's portfolio is going down, they're still getting paid.
They still get paid. It doesn't make any difference which direction the market is going. Basically, it's a percent of your assets that they're charging.
So
it's
that's
a great business model for them, And by having you in a buy and hold strategy, it's much less work for them. If you have somebody who is looking at these short-term assets for short-term income, whether it's before you retire or when you're in retirement, it means that you have to be much more alert as to what's happening in someone's portfolio. How do you do that if you have 200 or 300 or 400 clients? That's why their business model is to put you in something that becomes hands-off for them, but provides an ongoing income stream to them. And that's a great business model for them. But you don't have to go through that. You can self-direct. You can eliminate fees altogether, which over the course of your lifetime could result in several $100,000 more in your portfolio. You can participate in the down markets. You have the ability to protect your assets. Do you think you would be better off having an opportunity in 3 different directions or just one direction? Obviously, it's 3 directions, and you can do that in a self-directed IRA.
And don't be like that pop music band, One Direction. Although they have good songs, they probably don't know much about investing because they're in a one-way strategy.
That's correct. You don't want to do that.
We're not trying to put fear into people with a potential drop in the market. We've seen it. It happens all the time. But don't be that person that just does nothing. You have to protect what you have and take advantage of these opportunities. Learn those techniques and strategies. Al, you address that. You address the elephant in the room in these investing classes. Talk about those strategies to protect what you have from down markets. If you have retirement accounts right now, let's just say you're in your 50s right now even. You can't afford to wait for it to come back. You can't afford to stay the course and hold on for dear life. In the crypto market, they call it hodling, right? Mm-hmm. You can't afford, because that one thing you cannot get back is time.
Right.
So if you want to learn more about those techniques and strategies, great opportunities, call 952-814-4410 for an investing class right here in Bloomington. It's a physical setting, and you get some hands-on, see how the markets work, how they function, but also how platforms will actually guide you through your investment decisions. Brings a lot more confidence. 952-814-4410, or just text the word invest to the number 484848. We'll send you a text back with a link that will help you get started with a registration page and a date. Al, a lot of our listeners are probably listening right now and talking about, well, they're thinking really, why should I get in the market? Why should I take over my accounts? I'm paying somebody to do that for me. Well, I want you to kind of inspire people a little bit right now. Why now is probably the best time we'll ever see in our lifetime to learn the skills and techniques to utilize the markets, whether it's for income potential or using that to protect and have the opportunity to grow your retirement.
Yeah, when you look at volatility, a lot of people look at that and they fear volatility. When you learn how the markets really function and you learn what the opportunities are that are available to you, then volatility becomes something you look forward to. That becomes your friend, and you learn how to use it to your advantage. Right now we're seeing a market that has just been on a tear, but there's also the potential that it could pull back. And we have seen this past week where we've had days where it's been down, 900 points or 600 points. Those are big days. But that, from a percentage standpoint, we're only talking about 1 or 2%. When we talk about a 20, 30, 40, 50% retracement, that is a huge number when you look at what the impact is point-wise in the Dow or the S&P 500. Wouldn't you rather be positioned to participate beneficially when that happens? You should be able to go through any market condition and not really care what's happening because you know how to take advantage of it. How would you like to be able to have a position put into the market with any asset that you're looking at, knowing that if you're wrong, you're out with a minimal loss, and if you're right, you're out with a maximum profit? That's the goal. Have maximum profits, minimum risk, never have a big loss. If you follow our strategy, if you follow a proper rules-based strategy, if the market goes down 50% and you go down 50%, you're not following the rules. That should never happen to you. Learn how to take a small loss. Maybe 1% or 2% is not so bad. But learn how to do that and have it set so your platform does the trade automatically for you. If you're wrong, get out right away. If you're right, ride the full trend so you maximize the profit potential for yourself.
Yeah, I really like doing these shows, especially when we have weeks like this where the market drops big. And a lot of people say, oh, you guys are talking about a down market. Well, down markets do exist, but it's an opportunity. You should love this. I mean, as you can tell, the people on our YouTube show right now, we're smiling here. We're talking about how fun these markets are when they're going down. It's awesome. You want to be able to take advantage in up markets. Yes, everybody knows that. Take advantage in down markets. Everybody doesn't know that, but you got to learn those techniques and strategies so that way you can sleep better at night. And that's what it's all about, with especially if you have retirement accounts going into retirement or you're planning. You want to be able to sleep better at night and not have to worry about your money. There's actually a stat out there. 65% of people actually lose sleep over money.
Right.
You know what? Don't be part of those stats. Learn techniques and concepts to protect your accounts and do that with confidence. One last set of tickets. Call 952-814-4410 for this investing class right here in Bloomington. You'll get a financial quick start kit just for getting set up. Al, OTA tip of the week. Let's hear it.
Well, sometimes other people have better ideas than I do. So I'm going to quote somebody else. William Jones lived back in the 1700s. He said, the greatest discovery of our generation is that human beings can alter their lives by altering their attitudes of mind. Basically, as you think, so shall you be. Live as though you already are what you wish to become. It's attitude, and just believe you can do it. We'll help you with the details. You provide the attitude. That's the path to success.
You're exactly right. You have to think positive. Hopefully, positive thoughts will bring positive outcomes. 952-814-4410 for 2 tickets for the investing class. As always, same time, same place next week. Until then, retire young, my friends.